The dollar's had a rough ride in 2025, but what comes next for global currencies? A year ago, fears about the future of the dollar were easy to understand. Donald Trump was heading back to the White House and investors were right to be nervous. The dollar went on to suffer its worst first-half performance since 1973. It has stabilised in recent months, but the damage is done, down nearly 10% against its major peers in 2025. So if the dollar is losing its edge, who wins in FX next year? Jane Foley is head of FX strategy at Rabobank. So Jane, Wall Street banks expect the dollar to keep sliding next year as the Fed nudging rates lower. Do you see a weaker dollar in 2025 as Trump lines up his Fed chair pick?
Well, we've got the view that we're more likely to see very wide, choppy ranges in euro dollar. There are challenges, I think, for the Eurozone. There are challenges for the US. But it is interesting that in the second half of this year, the dollar's performance really has been quite good. In fact, whilst it's still, as you mentioned, the weakest performing currency in the year to date, well, there's been parts of the second part of this year when the dollar has been the best performer in the second half to date. That's not the case right now. But I think when we look at the terms of look at the disruption that we've had in the US economy, well, actually, we haven't had as much as we thought we would have through from tariffs, for instance. We've seen the Fed revise up its growth outlook for the US. And of course, we have many of the FOMC thinking that the impact on inflation from tariffs could be temporary. And that to us suggests that with less disruption and with the market no longer positioned long of the US dollar, we might see the dollar holding its ground quite well. So we tend to favour wide choppy ranges for, say, euro dollar into 2026, rather than a continued decline in the dollar's value.
Well, let's look closer at the euro and policy divergence with a big theme next year. With the euro seen rallying if the ECB widens its gap with the Fed, could the euro push towards 130 versus the dollar?
Well, we do think that 130 is a long way away. And of course, if you put yourself in the shoes perhaps of German exporters, well, 130 would be very unwelcome for them, because we've got to bear in mind that in Europe, there is still relatively high energy prices and of course the tariffs from the US, as well as a firmer exchange rate in terms of euro dollar than there was, say, a year ago. And we think a move to 130 would be a headwind which they would not want to accept. And we've got to bear in mind, although the consensus expects that finally Germany can pull itself out of stagnation in 2026, this is still a pretty weak economy. So the market consensus of 120, yes, maybe we'll see 120, but for us, we don't really see that we're going to see progressive declines for euro, or depressive declines for the value of the euro, of the dollar against the euro, beyond 120.
Well, carry trades in emerging markets had a blockbuster year in 2025. Do you expect that popular trend to continue next year?
You know, I think diversification is going to be on the watch list really for most portfolio managers. There are still uncertainties about the US, quite clearly, or they're not in the same ballpark as they were a year ago. But we think diversification is going to be something that many portfolio managers will really bear in mind for this year, not least because of some of the fiscal concerns that have begun to raise their heads during 2025. High levels of debt, high levels of budget deficits certainly meant that there's been diversification through the G10, and we think that will also raise the interest in certain emerging market currencies too. So yes, we do think emerging markets will continue to be pretty interesting, although clearly there's a very significant spread about which ones are going to be the outperformers.
Well, Goldman Sachs says that the yuan is undervalued and could outperform market expectations next year. They're calling it one of their highest conviction trades. Do you agree?
I think that is easier to be a higher conviction trade if you think that the dollar is also going to weaken. I think we need to step back and look at the trade-weighted value for the exchange rate there, the effective exchange rate for China. And I think that tells us quite a bit. Now, China clearly has still a lot of headwinds. It's got deflationary issues, for instance. It wants to stimulate its consumer base, but unemployment is rising. Consumers are likely to be quite weary. And so from that point of view, I think it's going to be difficult to allow the renminbi to firm up significantly on an effective exchange rate basis. So if you think that the dollar is going to weaken, well, sure, you can allow potentially the renminbi to strengthen on against the US dollar, as long as the effective exchange rate would still be weakening. But given our view that we are going to see more choppy ranges for the dollar, I'm not quite so certain about that.
So finally, Jane, currency forecasting is notoriously tricky, but which currency pairs are standing out as the ones to watch for you in 2026?
Well, certainly, if we look at the best performer within the G10 this year, we see the Swedish krona. And I think we're going to see additional outperformance by the krona through the new year too. Not only is the Riksbank one of those central banks that may potentially be hiking rates, potentially late 2026 or maybe early 2027, but it is also an economy that does have a fiscal loosening going on there. But its deficit position is good, its current account position is good, and I think in the world that we're going into, I think those fundamentals could become more important.
That was Jane Foley from Rabobank. Don't forget, you can watch more videos on Reuters.com.